Rolling options is an easy way to make consistent profits month after month. Not every month is the stock price going to move your way. The market moves up and down. However, if you have a longer term target price for a stock and say you're either long or short, you just play it in that direction and roll month after month. And as long as you're right in the next year or two, you can print money. In this video, I'm going to answer the questions: how can you roll stock options even as a beginner for huge profits, and when is the best time to roll? I'm also going to show you a couple of examples of exactly how to roll options on the option trading platform so that you can profit over the long term this year. I think it's super important that we understand the strategies that the rich are using to get richer. Then we can use those same tools and strategies to profit for ourselves in any market. Please do me a favor, go ahead and hit that like and subscribe button to help get the video out to more people. I really appreciate it, so thank you very much. Also, download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks alone outright. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. How can you roll stock options even as a beginner for huge profits? Guys, it's easy to roll stock options, but what does that mean? What does it mean to roll stock options? Rolling stock options just means that you're closing a trade in the near month and opening one in the next weekly or monthly option cycle. For this video, we're going to just focus on the regular monthly option cycles since they are the most popular, trade the most, and are therefore the most liquid. Why should you roll stock options? One of the key reasons that you should roll stock options is because the stock price has moved against you, hit your short strike, and you just haven't profited yet. Maybe you are long in a trade like Adobe, and it has taken a recent hit following earnings. This happened to me in Adobe. They actually beat on both the top and bottom lines with earnings and revenue. However, they guided lower at 5.1 to 5.15 billion in revenue, slightly down from 5.19 billion. But this is the game that management plays, right? Why guide higher and make the number more challenging to meet? No, they sandbag it and guide lower so they can beat it again next month. I know the game. Adobe is a great company, and you can see here on the Yahoo Finance summary page some of the numbers. They have a short, mid, and long-term buy rating or positive outlook for the stock going forward. It's trading at 611, down from a high of 633, and Yahoo has a one-year target for Adobe at 649. I like to use TradingView and plot out a longer-term chart. This one goes back to 2018. I have drawn a trend line, and not even a super aggressive one, and it points to a stock price of around 700, which is my target. However, with the Fed poised to cut rates at some point, at least a couple of times this year, tech stocks like Adobe should do well. That is an environment where companies and people can spend money, and Adobe should profit from that. Now, if you look at the Adobe trade that I currently have on, you see that it is the 575, 560 put credit spread. I'm up $335. Hey Darren, you said you were down on this trade and it looks like you're up. Nah, I closed a couple of tranches. So in this trade, I still have $388 left to collect and have an 82% probability of profit. So Darren, why don't you leave the trade on and just collect the other $388? I may do that. This is just a video showing you what can be done. I may wait a little longer, and you can too. We still have 26 days to expiration and the $388 left to collect. But if you do want to roll right now, you can just right click on the two options and click on the March 15th option chain, which is the next monthly chain. We are currently in February at 26 DTE, days to expiration, and the March puts us out at 54 days to expiration. By the way, guys, I'm showing you how to roll options on the Tastytrade option trading platform. You can do this on any platform or with any brokerage. However, Tastytrade is one of the best and most intuitive for trading options. These are the guys that developed the TOS, Thinkorswim, trading platform and then sold it to TD Ameritrade. TD and Schwab both use it today. Tastytrade is even better. Use the link below and you can get cash back when you open an account. I recommend you open with around $5,000 so that you can place a few different trades. So opening up the March chain by just clicking on it, we can see the two Feb options that we are closing. And then in the March option chain, it sets up to sell the same 575 put and buy the 560 put. However, there really isn't a big benefit to doing this since we will have to pay a $23 debit. Remember, one option contract controls 100 shares, so this 23 cents is really $23. So instead, we are going to drag those options down and sell the 600 by clicking on the bid and buy the 585 as protection by clicking on the ask. Now you can see that we receive a $157 credit for doing this, and we extend the time frame by 1 month. So you can see we can just roll out month after month and collect additional premium waiting for the stock price to move up positively in the direction. Now, if you are wrong, eventually you'll not be able to roll for a profit, so you need to be somewhat right on direction over the long term. Now, you can also roll options when your short strike is tested on the call side. Take a look at these current positions in AMD. The stock price is currently trading at 174. You can see the puts that I have on are very profitable. However, the 175 short call strike is very close to being tested or hit. So this will be a good time to take a look at rolling it out to the next monthly option cycle as long as I want to stay in the stock option trade. Again, we right click on the 175 and 195 calls and open up the March option chain. You can see that we receive a $43 credit for rolling out to March. However, in looking at AMD, you can see that it is currently at its 52-week highs at 174, and Yahoo's target is only 145. My target is a little higher and closer to the long-term trend line when plotted on the TradingView chart. I have a target of around $180. So I can roll up and out by moving the strikes to the 185-200 call vertical spread. This allows a little more room for the stock price to move up and still provides a 69% probability of profit. However, I'll pay $107 and we want to receive credits, not pay debits, right? So what we can do is also roll the two put credit spreads to March as well. Guys, this is why it's sometimes good to trade both sides. This time, we right-click and highlight the two put credit spreads and then click on the March option chain. This provides us with a $43 credit for each put option, so $86 for the two. However, we can collect more credit since the price has already moved up by rolling up the put credit spreads. We move the two spreads up to the 150, 160 strikes, which allows us to collect $222 for each spread, so $444 total for the two. We still have a 70% probability of profit on this roll trade. So if we make $444 for the put spreads and subtract the $107 paid for the call spread, we have $337 profit by rolling out 1 month. We are now recentered with our profit zone as well. Keep in mind AMD earnings is coming soon on January 30th. So it's up to you whether you want to roll now and collect the higher premiums prior to earnings, or you can wait until earnings or even post earnings right after and roll or put on a new trade at that time. Let me know in the comments what you would do. All right, guys, if you're a beginner and this sounded kind of confusing, don't worry. It did for me as well at first. We'll continue to learn and profit together in future videos. Make sure you hit like and subscribe, download the free options workshop, and I'll see you in the next video.